What's good, everybody? So today I'm coming to you with a video that I'm making because I actually had one of the channel subscribers to reach out and say thank you because they used a product that I mentioned in an old video to get their credit card debt paid off. So I wanted to redo that video and revisit this company just to give you guys an opportunity to see what it is and how it might be able to help you be able to pay your credit card debt down. Not to mention the fact it appears that they have lowered their credit score requirements in order to do so. So this might be actually way more helpful to way more people. So we're going to get into talking about that company in just a second. If you don't know me, I'm Will Frazier, your credit and business expert, bringing you tips to help you with your personal credit as well as to help you with business strategies and business funding. So if you like to hear information like that, make sure that you like this video and by hitting the thumbs up button, subscribe to the channel and turn on notifications so you'll be notified anytime I put out new videos just like this one. So okay, the company we're going to be talking about today is going to be called Payoff. Now Payoff, again, as I mentioned, is a company that provides a loan to a person in order to pay off their credit cards that they might have. Now, the reason why this can be important to helping you is because if you have credit card debt or if you have a lot of credit cards where you have high balances on them, then it can be dramatically lowering your credit score because credit cards affect your score way more than loans do. Now, you may not have all of the money up front available to go ahead and pay down those cards. So getting something like a loan can help consolidate those credit card balances into one place. And also, instead of you having to pay those interest rates, which can usually be a lot higher on credit cards, instead of you having to pay all those different rates on all those different balances, you can pay one more than likely lower interest rate and have all of that money put in one place where you can just pay it off in a fixed amount. This will free up the balances on your credit cards, not for you to spend again, of course, but to help your credit score go back up, and it can usually make a very significant difference. I've seen paying down credit card balances increase a person's credit score anywhere from 30 points to 90 points just from paying down their credit cards. And again, loan balances won't affect your score as much as a credit card balance. So of course, it's still going to be beneficial to you to use something like this to pay down your credit card debt. So without further ado, let's get into some of the information about Payoff. Now, the main thing that you can see right here is a credit score boost. You can see that they mentioned here that paying off your credit cards can help increase your credit score by up to 40 points. And of course, this is going to depend on the person because whatever's going on with your credit report may not be the same as everybody else's, but I'm assuming this is an average that about 40 plus points is what most people have seen from an increase from paying down their credit card balances. Now this does allude to what I just mentioned, lower rates than most credit cards and customizable loan terms is something that you can get from them. It's simple and easy. You can get a single fixed and affordable monthly payment to simplify things in your life. They have personal service, a fast application. It only takes a few minutes to find out what your rate is, and it's designed specifically to help you with that high interest credit card debt. Now, of course, you're probably wondering how did this work? So basically the first step is you check your rate. So you'll click here to check your rate. There are no application fees, no commitments, and it does not impact your credit score. So this is going to be a soft pull. It won't be a hard inquiry that will actually affect your credit score to see what your rate would be. You choose whatever your terms are. So, after you submit that information, you'll be able to see your rate and you can choose whatever terms you feel like will be the best terms for you to take this loan on. You'll verify your information. So you review the terms, verify whatever information you submitted to them, and then you'll e-sign your loan documents and then you'll receive the funds. They can actually send them to you electronically and deposit them directly into your bank account. Now let's talk a little bit about their rates and their terms that they have. So as far as rates go, they have anywhere from 5.99% APR to 24.99% APR. So that's really going to be based upon, your credit and some other things. So that's something to take into consideration, but they do have lower rates on these loans. Now the loan amounts and terms can be anywhere from $5,000 to $40,000. And the term that you pay this back on can be anywhere between 2 to 5 years. Whatever works best for you is what they're trying to, help you out with. Now, origination fee, that is actually their only fee that they have. It's charged once they issue the loan, and it can be anywhere from 0% to 5%. So I'm assuming based on how good your credit is, you might have a 0% origination fee, and it can go up to 5% of the loan amount that you get. And more than likely, they're going to take that out of the loan balance that you have. And an example right here is, let's say you took out $16,000, it was at 10.99% APR. It will give you a monthly payment of about $413 for 48 months if that's the term you select. Now they don't have things like application fees, they don't have early or extra payment fees, they don't have late fees. They don't have check processing fees, return check fees, and no annual fees on these loans that they are offering to you. And now, of course, very important, what are the qualifications for getting approved? Let's go ahead and talk about that really quickly. So the FICO score needs to be 550 or higher. This used to be about 650, I believe it was, but now they've lowered it to 550. So that is great for the opportunity to offer this to more people, to give them access to be able to pay down their credit card scores, because, you know, like I said, those credit card balances can really lower your credit score. So if your credit score has been lowered a lot just because of your credit card balances, then this is something that's still going to be opened up to you to be able to try. Now they say 0 delinquencies, so current delinquencies. So a delinquency is really like a late payment, a 30-day or more late payment on your credit report. If you have current delinquencies, and with credit, anything within the last 2 years can be considered current. So it's not just like the last few months. So even if you get current on the account, it is still possible that you might still be considered delinquent if, you know, you're current over the last 2 months, but just 3 months prior to that you were delinquent on the account. That is something that can still affect you at this current moment. Now, that's not to say that they will definitely decline you if it is a little bit older, but, you know, they say 0 delinquencies here, and they don't determine here what time frame they're looking at for current. So I'm just offering you some things to look at that they might be considering here. Now, some other factors that they look at are your debt to income ratio. So basically how much money you bring in monthly versus how many debt obligations you have that show up on your credit monthly. They look at the age of your credit history, any open and satisfactory trade lines. You do have to have at least 3 years of credit history on your credit report. So if you're a person that is just completely new to credit and you have not had credit for at least 3 years, then that means that you won't qualify for this as well. So of course they're going to look at your utilization. Now, I don't know how they consider this based on the fact that you're trying to use this to pay down your utilization. It might be that they take into consideration based on the current utilization on your credit report if this would actually take your credit to a good place, so that they know that this is really, you know, what the issue is, and then they determine it from there. Again, I'm not their underwriter. I'm just telling you some things that they might be looking at, but that is something that they do take into consideration. And of course, I don't know if it's a heavy factor in what they look at. It could be a small percentage of what they look at as well, because again, they are trying to help you to get your utilization down on your credit cards. But they clearly say that the two main things here are your FICO score being 550 or better, and having no current delinquencies, because these things would really tell them if you are likely only suffering from the credit card debt, or if you're more risky for them to take you on and give you a loan. I will have a link to Payoff down in the description, so hopefully that can help you, so you can check them out for yourself, see if you do qualify for this. And again, you can check your rate just by submitting your information, and it will be a soft pull, so it won't hurt your credit. And if you do decide to accept the offer, it will be a hard pull on your credit at that point. But guess what? At the end of the day, when you get your credit card balances paid down, whatever few points you might have lost from that inquiry, 3-5 points from the inquiry, there's a high likelihood that you might actually be one of the people to get 40 or more points to come up from your credit. So basically that 40 or 50 points, if that's what you're supposed to get based on your situation, minus the 3 or 5 points that you would have lost from the hard inquiry, really does not outweigh anything. And again, you already know at this point that you have been approved and you're going to be able to pay down your credit cards. So you will see a boost to your credit. So taking a hard pull at that point versus taking a hard pull just to see if you qualify is way different. And that's something that I would tell you to do any day. So again, the company is Payoff. The link is in the description. Go ahead and check them out, and hopefully they can help you too. Thank you for sticking around to the end of the video, and I'll see you guys next time.